Today we're going to talk about mortgages. What is a mortgage and why I believe that you shouldn't pay off your mortgage early. One of the reasons is, in my opinion, a mortgage for the most part is good debt. So what it is it's a mortgage is the debt that you take on buying your house. So and you're financing for it. Refinancing your mortgage it will cost closing costs again, but it is also an option when you buy your house at an interest rate that is higher than your desired interest rate. Now, I'll give you an example. I bought my house a few years ago at 2.9% financing interest rate. I am never going to be able to get that rate again in my life. To me, that's more free money. So you want to make sure that you understand what a mortgage is. You understand the terms of your mortgage. Usually mortgages are 30-year, 15-year, 20-year. And now I hear that we have mortgages that are even 40 years because the housing market has become so expensive. So once you're paying a mortgage, most mortgage has a time to finish paying off the mortgage. So your mortgage is amortized. Amortization is how you're paying the mortgage off. So part of the payments that you have usually when you're paying a mortgage is your principal, which is the amount that reduces your loan, your interest, which is the cost of the loan, your taxes, and your insurance for your mortgage. That is most mortgage amount. So why shouldn't you pay off your mortgage early? Is one, it's probably the only debt you have with the lowest interest rate. Most likely it is, I call it good debt because the interest rate on the mortgage, like for example, my mortgage is 2.9%. I can get more in the bank for my money. I can get 5% at the bank for my money. Why am I going to pay off something that I'm paying less for? So that's one reason I wouldn't pay off a mortgage. I'd rather put the money in a brokerage account or a money market account if you're not wanting to put it in, and earn more on that money as opposed to paying off the mortgage early. One of the other things that you can do is save that money and buy other real estate. Instead of paying off your mortgage early, take that, you're used to that one set payment. You're used to that one set payment 10 years down the line, you're making more money, but your mortgage is pretty much one set payment. You can save that money and use that amount for a second home where you're renting and you're making money and you're building your wealth to that. So that's the second reason that I wouldn't be paying off that mortgage. I want to make sure, if you're in, one of the reasons that you wouldn't postpone paying off your mortgage is if it's in a higher mortgage interest payment. If your interest rate is higher, then you want to lower your interest rate. One of the ways to do that is to refinance that mortgage and lower the interest rate if the interest rate is worth it. Usually I would say at least 1% or below, because you will have to incur cost for that, which is your closing cost. But the rate will be, if it's a lower rate, it will definitely be able to subside that amount that you're paying. Once you are living in a home and you're paying a certain amount of interest rate, you want to make sure that's going to be pretty much on and off your rate, your payment for 30 years, except for if your insurance goes up or your taxes goes up. In most states, you have some type of a homestead. The homestead allows your tax to not go up above a certain amount if it is your principal home for yourself and your family. Then the insurance for that mortgage, which is one of the issues that we're facing in Florida now, is we're having much higher insurance, which is by in turn raising the amount of our mortgage payment, but the actual mortgage payment amount is not going up. It's our escrow amount is going up because our insurance is higher. So those are the things that you also want to be thinking about. The main reason that I wouldn't want to pay off my mortgage is because I am going to have other needs later on. I would rather understand the cost of money. If my mortgage is at the rate of 2, 3, 4%, most likely these are the lowest rates that I will ever get on debt. Car payments are going to be higher. Credit card is definitely higher. Student loans are higher. So if you have any of these other three things, I would definitely work on paying these things off first before I pay off my mortgage. So I say you continue with your mortgage, you refinance if you need to, if the interest rate is at least 1% or below, because if you're saving off 1% of interest, it definitely makes sense. You're at least saving probably mortgage interest of over $200 a month off your payment. So understanding what compounded interest means, it works on both sides. When you're getting paid compounded interest and when you're paying compounded interest. And one of the ways that you do pay compounded interest is through mortgage. There are pros and cons of refinancing a mortgage. Some of the pros or cons of refinancing a mortgage is understanding many things. One of the cons is the cost of the mortgage, which is the closing costs. You have to pay a closing costs when you're refinancing a mortgage. To justify paying closing costs, again, we would have to go into, when you go to a mortgage broker, you want to understand what the closing cost is. If you're going to stay in your house for 4 or 5 years, then it might make sense to refinance to a lower interest rate because you're going to stay in your house longer than it is. So you have to understand how many years it's going to take for you to recoup that closing cost. And if you're going to sell your house next year, it doesn't make sense to refinance your house and incur that closing cost now, because it'll take you 4 years to pay off that closing cost amount. So it doesn't make sense. On the flip side, one of the pros of refinancing is applying for a lower interest rate in the duration of the mortgage. So since, if you're only 16 months into your 30-year mortgage and you have you'll have long-term advantage of a lower interest rate. And if interest rate is lower, that means a lower payment. So in the long run, it makes sense to refinance. If you're going to stay in your house for a longer duration of the time, then it makes sense to refinance that mortgage, because in the long run, you're in 4 or 5 years, you're going to pay off that closing cost. You're getting a lower interest rate for 30 years. So you're going to be saving tens of thousands of dollars just on interest, not counting that your payment is even going to be lower every month. So you need to understand the pros and cons of a mortgage. Understand it is one of the biggest debt that you're going to be taking on in your life, but also understand that owning your home is one of the biggest assets that you're going to have, and you need to manage that properly. One of the things that I do not recommend is that you keep refinancing and taking money out of your house to pay for frivolous things. Your house is one of your biggest assets. You never want to be upside down. You never want to owe more than the house is worth. And if you are careful about these things, you will not be upside down. The additional things that I would say about a mortgage is, if you're going to be earning 7 to 10% on the stock market, you over 20 something years, if you're paying 20 to 25 years, you could put that same amount that you're adding to your mortgage as extra payments to pay off early into the stock market, into other investments, and end up making more money in the long run, especially because you will never be able to save that money, because we're not inclined good for savings our money. We see the money and we spend it. So if we take that extra payments, invest it in something else, whether it's stocks, bonds, insurance, mutual funds, ETFs, you might be earning more on that as opposed to paying off your mortgage early. Interest rates go up and down, so you always need to educate yourself about what it means. You need to educate yourself about closing costs, and you need to be responsible about other debt that you have. Now, these are all pros and cons about whether you should pay off a mortgage or not. For the most part, I do not recommend paying off the mortgage, but there's always exceptions to the rule. Thank you so much for watching this video today. Comment below on what topic you would like for me to cover next, and I'll see you on the next video.